Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 20th until the 24th of June. Now before we dive into the webinar, some of the key highlights of the week were the comeback that stocks staged on Friday, and more specifically Wells Fargo, as well as the first red week for the US dollar this month. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So like we mentioned, kicking things off with stocks, first of all, we're going to be looking at Wells Fargo, the ticker being WFC. But before we get into that, it wasn't just the Dow Jones that posted a comeback on Friday. We actually had all three major US indices posting triple-digit gains on Friday. So the Dow Jones was up 800 points, or around about 3%, or a little bit more than 3%. Then we also had the Nasdaq, which was up by 444 points, or 3.8%. And then lastly, the S&P 500 was up by 130 points, or 3.44% respectively. Now you can see all of those assets by just searching for them in the search bar in the top left corner. So you can see with the S&P, it pretty much dwarfed last week's candlestick, so it made back all those losses that were made throughout the course of last week, just in the period of this week. Then we also had, like we said, the Nasdaq, so for this one you can search US Tech 100, and it was pretty much a similar story. So with this one made up even more than what it lost last week, so almost double, more or less. And then we also had the US Dow Jones, which you can search for US 30, and pretty much a similar story like the S&P 500, just making back up all the losses that were made throughout the course of last week. Now, if we're looking at sectors more specifically, the financial sector was amongst the biggest gainers on the day today, as we had the Fed revealing the results of its annual stress test. The Fed mentioned that companies such as Wells Fargo have strong pools of capital to weather a severe recession, which ultimately meant that Wells Fargo surged by 7.5%, or $2.86 alone. Just on Friday. I mean, this is a weekly chart, so if I switch this on the daily, you'll be able to see that impact a little bit better. So you can see this was Thursday's closing candle, and with the open on Friday, we gap up, and then we pretty much closed towards the very highs of the day. So clearly the comments that were made towards the financial sector more specifically, and then Wells Fargo, is something that impacted the stock. If we look at Goldman Sachs, we're pretty much going to see a similar story. Had a close here, and then with the very next day we're gapping up and then closing towards the very highs, and we're pretty much filling this gap that we can see right here. So overall, a good day for stocks in general, and even more specifically for the financial sector. Now moving on to Forex. With regards to Forex, we had the dollar index posting its first weekly decline for the month of June. So we're going to switch here on the charts. I'm just going to remove these for the time being. And it's on the weekly time frame, as you can see. So for the month of June, we pretty much have 1, 2, and this third being the third candlestick. You can see it's posting the first weekly decline. Now, some of the reasons for the decline, I mean, there could be quite a few, but one of them being that commodity prices fell throughout the week, which is something that could have eased somewhat the fears of an even worsening inflation rise. And this, in terms, can mean that investors were pulling money out of the currency markets and back into the equities markets, which somewhat coincides with what we had on the stocks market on Friday, since we had the equity market staging a comeback, as we mentioned earlier on. And moreover, we also had some negative fundamental data with regards to the US, which may have been another potential factor to the drop of the US dollar. We had the consumer sentiment index showing a reading of 50, which is down 8 points from a reading of 58 back in May. And some of the notable gainers against the US dollar were the Swiss franc. So we'll just pull up the chart now just to have a look. and I'll keep this, I'll switch this on the weekly time frame. So with the US dollar Swiss franc, the main narrative being the fact that we also had the Swiss National Bank, if you remember, about a week and a half ago, they reported their interest rates, and they actually hiked the rates by 50 basis points. So the rates were hiked, it was minus 0.75%, now sitting at minus 25%. So it seems like the impact of that report is still strengthening the Swiss franc. As we can see over the course of the last 2 weeks, it has strengthened quite significantly against the dollar, because obviously it doesn't really follow this kind of policy, this kind of aggressive monetary policy of hiking rates and by this much, like the Swiss National Bank. Hence why we can see that it's been strengthening against the dollar, and pretty much over the course of this week alone, it was down by 1.16%, so up against the dollar, or 112 pips, and this brings it to its second consecutive weekly gain again against the US dollar. We can see it peaked here, reaching the highs and potentially forming a double top, which was right smack at the 1 level. And then ever since, we've been pretty much selling off, and we're back down to the 0.95s. And then moving on to commodities, then we're going to be looking at oil first. So let me put oil. And prices fell throughout the course of the week. This was, as you can see from the chart, it was the third consecutive week in the red. The oil rig count rose by 10, according to Baker Hughes on Friday, which means that the count rose to 594 in the 7 days through Friday. Whereas if we compare it to a year earlier, the US had 372 oil rigs in operation, just to compare within a year's time the difference between the figures. And to add to that, the weekly oil inventory report also showed a much greater increase in supply, which pressured prices even further, and hence why we keep mentioning the oil inventory report each time we host the outlook as well, because it's definitely an event that can drive prices quite significantly for oil. Now, the expectation was a drop of 1.5 million barrels in supply. So again, a drop of 1.5 million barrels, but the figures actually showed an increase of 5 million barrels, which is more than 5 times greater the estimate. So this meant that prices fell by 2.25%, which is this candlestick right here, or $2.50 on the week, which is also, it's more or less like a similar price action we saw with US dollar Swiss franc. Not that they're related in any way, but we saw, if you remember, the US dollar Swiss franc topping at the 1 level, but here we're topping around the 124s, and pretty much selling off ever since. We could get a retest down to this level, which is the next kind of structure zone, if you want to put it that way, before we get any further hints as to what prices could do next, with their break even further lower, depending on what reports we might get with regards to the supply of oil in the market. And if not, we could see it obviously going back up higher towards the highs. And yeah, this is pretty much it for the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.